A catastrophic drawdown. It literally feels like your whole trading career just went up in smoke in a flash, doesn't it? You lose your confidence, you start totally questioning your strategy, and you feel this massive crushing pressure to just make all that money back immediately. But today, we're tackling the exact step-by-step protocol to recover after a massive, account-draining drawdown, and doing it without blowing whatever is actually left of your portfolio. Look, the goal here is not to recover fast. The goal is to stop the damage, rebuild your control, and return to the markets with a process that is absolutely bulletproof. Okay? Let's dive right into this. So, the account is blown. What on earth happens now? You're sitting there staring at the screen, probably feeling totally lost, super emotional, and desperate to make the money back quickly. But listen to me very closely. The absolute worst thing you can do right now is keep trading on tilt. Recovering from a major drawdown requires way more than just, blind motivation or positive thinking. Your confidence and your decision-making are severely damaged right now. So the comeback absolutely has to start with protecting what little capital you have left.
All right, step 1. We need to stop the bleeding right now.
Because your goal right now isn't to recover your account quickly. Your very first job is to step away from the screen and stop live trading entirely. I mean it. You literally cannot fix a problem while you're actively participating in it. When your account hits that maximum drawdown line, boom, the screens go off. Do not just reduce your size and keep going. Do not take just one more trade. Because if you try to win it back immediately, you're going to fall straight into a revenge trading spiral. You know how it goes. You double your position size after a bad loss to make it back, you take another loss, and you double it again. Taking those oversized, highly emotional risks is exactly how a simple $500 red day rapidly snowballs into a $3,000 catastrophe in under 90 minutes. It will destroy whatever capital you still have. Take the advice of veteran trader Austin Silver here. He says, pull the plug, walk away for 5 days, bro. You will not miss the markets. And honestly, he's absolutely right. The market has been here for decades. It is not going anywhere. There will be other massive moves tomorrow, next week, next year. You have to respect yourself and your hard-earned money enough to just walk away and let that intense emotional pressure completely fade before you even think about looking at another chart.
Moving on to step 2. It's time to find the root cause.
Once you have actually cleared your head, it's time for a ruthless, data-driven autopsy. Was this massive drawdown caused by totally valid trades that just didn't work out? Or was it caused by you breaking your own rules? Because a drawdown caused by valid trades means you need a strategy review. But a drawdown caused by rule breaking, that means you need a discipline review. We have to look at the hard data, completely stripped of any emotion. Start filtering your past sessions to pinpoint exactly where the bleeding is coming from. Is a specific setup failing? Are you just getting crushed during the afternoon session? If your profit factor is sitting below 1.0, your account is bleeding out, and applying these data filters will show you the exact wound. Now, as you review this data, keep an eagle eye out for these massive red flags. You really have to ask yourself and be totally honest here. Did you move your stop loss just to give it a little more room? Did you blow right past your daily loss limit? Did you oversize a position out of sheer frustration? Or maybe you had an amazing morning, but then you just kept taking low-quality setups in the afternoon and gave back every single penny you earned? If you are checking these boxes, you don't have a strategy problem. You have an execution problem.
Which brings us nicely to step 3, identifying if this is a strategy failure or an execution failure.
We have to completely separate a broken trading model from a broken trader. It is so crucial to figure out if your trading model is fundamentally broken or if you are the one breaking it. Honestly, so many traders will take a perfectly good strategy, completely ruin it with terrible execution, and then blame the strategy. So compare your backtesting results to your live trading results. If your strategy consistently prints money in historical testing but fails spectacularly when you go live, well, that's an execution and discipline failure on your end. The issue is your emotions, your timing, or your risk management. Now, if both your backtesting and your live results are terrible, then yeah, the strategy itself actually needs a rebuild. Now, this is a really tough pill to swallow when it comes to trading psychology. The harsh truth is that your comfortable trading methods are exactly why you are losing. The stuff that you're naturally drawn to, taking those tiny, quick profits so you feel like a winner, or nudging that stop loss down so you don't have to admit you're wrong, those habits feel really emotionally comfortable, but mathematically, they're totally flawed. The best winning strategies will actually violate your comfort zone by design.
All right, step 4. We need to cut your risk and set some strict new rules.
Listen, when you finally do return to the live markets, you absolutely cannot use your normal position size. You just can't. You've got to shrink it way down. If you normally risk $500 a trade, cut it down to a tiny fraction of that. Why? Because after a catastrophic drawdown, trading with smaller size drastically lowers the emotional pressure. It actually lets you focus entirely on your process instead of obsessing over the dollar signs. Think about it. If your old risk plan allowed a massive blown account to happen in the first place, well, that plan failed. So we're implementing strict boundaries now. You need a hard daily loss limit where the screens immediately turn off. You need a defined max drawdown limit, usually around 15 to 25% of your total account. And critically, you need to institute a give-back rule. If you're up big for the day, set a profit floor so you absolutely never let a big green day turn into a red one.
Here's a really powerful baseline for you. 3x risk. Set your daily loss limit at exactly 3 times your normal risk per trade. 3 consecutive losses, and the screens go off. Period. No exceptions at all. If you usually risk $500 a trade, your absolute daily limit is $1,500. 3 losses in a row is plenty of evidence to realize that either the market just isn't cooperating today or your head isn't in the game. This stops the bleeding before you lose 7 trades in a row and dig a hole that takes literally weeks to climb out of.
Step 5. Master one single setup. Seriously, stop strategy hopping.
Please do not jump between a dozen different strategies right now looking for some quick fix or a magical holy grail. Rebuilding your consistency works best when you pick one single high-quality setup and make the whole process incredibly simple and highly measurable. Making surface-level changes just preserves the underlying psychological garbage that caused your failure in the first place. So take your one chosen setup, backtest it historically to prove it actually has an edge, forward test it in the live market with tiny size, and journal every single tick. Log the setup, log the mistakes, log the time of day, track everything. 100. That is the magic number. You have to give any proven strategy at least 100 trades before you even think about evaluating how effective it is. Because during this rebuilding phase, you aren't tracking your profits. You're tracking your behavioral compliance. Did you actually follow the rules? Did you execute the setup perfectly? Don't abandon a method during normal market variance just because you caught a couple of red days. Trust your system way over your emotions.
And finally, step 6, review your data with TradeZella analytics. If you want to make sure you literally never face a catastrophic drawdown blindly again, you've got to automate your journaling. The massive gap between knowing you should journal and actually doing it, that's where most traders lose all their money. TradeZella handles this automatically. It tracks your setups, your mistakes, your emotional tilt, and all your risk metrics. It's basically a mirror reflecting your actual discipline back at you. Instead of just guessing why you lost money, the analytics literally show you if your drawdown came from one specific setup, a bad hour of the day, or one repeated mistake, like constantly failing to let your winners run. It takes the guesswork completely out of the equation.
Oh, and their trade replay feature, it is an absolute game changer. Looking at a static chart at the very end of the day makes every single exit look so obvious in hindsight. But with trade replay, you can literally rewatch your worst trades play out, second by second, exactly as they printed in real time. You can feel that uncertainty all over again and pinpoint the exact, precise moment you went off the rails and started revenge trading or panicked out of a perfectly good setup.
So, let's wrap this up. The final verdict here is actually remarkably simple. You bounce back from a blown account by slowing down, not speeding up. Stop live trading immediately. Review the damage objectively using hard data. Massively reduce your risk so you can remove that emotional pressure, and then rebuild your consistency from the ground up using just one clear setup. Look, a catastrophic drawdown exposes your deepest weaknesses as a trader, but if you handle it correctly, it literally forces you to become the highly disciplined trader you were always meant to be.
If you are finally ready to stop the bleeding, kill those terrible habits, and rebuild your account using professional, automated analytics, hit the exclusive link down in the description below to get 20% off TradeZella today. Stop trusting your fragile emotions and start trusting the hard data. And I'm going to leave you with this one thought to chew on until next time. What trading behaviors feel the most natural and comfortable to you right now? Because I guarantee you, those might be the exact habits you need to destroy to finally become a consistently profitable trader. See you in this one.